Yeah, hi, good afternoon, Vikas ji.
Yeah, hello, good afternoon. Yeah, Samirji.
So, am I audible or my voice is clear?
Yes, very much. Sorry for
Okay.
the delay. Yeah,
So, can we start or we need 2 minutes time?
yeah. Let me just share the screen and see if that is working for you. Uh,
Yeah. So, hi, a very warm good evening to everyone. Welcome to our Market Outlook webinar for September 2025. As you know, India continues to stand out as the fastest growing major economy with 7% GDP growth backed by strong domestic demand, reforms, and policy support by 2030. India is projected to emerge as the world's third largest economy, a journey driven by robust initiatives like Digital India, Make in India, and GST reforms. Today, we will walk through the key global and domestic trends shaping market, sectorial performance, and the opportunities ahead for the investor. So, over to you, Vikas ji.
all right, thank you. First of all, I would like to thank all the participants for taking the time out and joining this call. So, this is our latest market outlook. So, we do this every month. So, we'll try and share some data points you and give you some perspective about what's happening in the economy. So this time we have taken the topic as by 2030, India is set to become the third largest economy. So we'll dwell upon that. So let me first come to the GDP number, which I'm sure this has surprised everyone. Well, the entire world was expecting that India to underperform and deliver close to 6.2, 6.3% kind of GDP number vis-a-vis 6.5%, which was which was projected by both IMF as well as RBI. But India surprised everybody by delivering 7.8% of GDP growth in the first quarter itself. So this is recorded the highest as well as the fastest growth worldwide. Second is China, which was at about 5.2% of growth, and then Indonesia, which was about 5.1, USA 2.1, and UK 1.2. When you look at India's GDP, the journey, why do I say that we are all set to become third largest economy? Is that some data points here? So your US is at $30 trillion. China is at about 19 and a half, both put together, Hong Kong as well. Germany is 4.7. India is about 4.18. We have just surpassed Japan in terms of the GDP numbers, and Germany is not growing. In fact, they are degrowing. So it's like a train coming on the other opposite side to each other, and India continues to grow at about 6.5%. So if we continue with the similar growth, then very soon by 2027 or maximum by 2028, we're going to surpass Germany as well. And if that happens, then by the way, there are only two countries which are left out, which are beyond $5 trillion of economy, which is China and US. And then India will become the third largest. That is what has been projected by IMF. So what is working for India? Let's look at that. So couple of initiatives which is kind of fueling the India's economic transformation. Well, I have taken down five major things here. One is that PLI scheme. Well, all of you know that how government of India is incentivizing some of the industries to do better. So they are kind of backed up by 1.9 lakh crores of outlay. It has drawn 1.7 lakh crores of investment, which not only boosted export but also created good number of jobs, which is eventually helping and strengthening the India's overall global value chain. The second thing is Digital India. Well, everybody talks about it. India has done it. Digital India expanded internet users from 25 crores in 2014 when this NDA government took over, to a level of about almost 100 odd crores as I talk to you. And with this 5G and the 6G, which is on your radar, on your track, on your roadmap, India ranks globally third largest in terms of digitalization and driving tech-led growth. I don't know how many of you've seen, but there are a lot of tech-led NBFCs which are coming up, which are growing very fast as far as our industry is concerned. What we are also witnessing is good number of yeah, tech driven organization, especially the startups in the healthcare. They're coming out with unique ideas and unique products where you can measure your sugar, your blood pressure in a matter of 5 seconds to 10 seconds. That's the kind of innovation which is happening as far as Indian startup is concerned. Then the third important is which our honorable Prime Minister talks about, which has been there for quite some time, is called Make in India initiative. Well, this was launched in 2014. A lot of people said that in Make in India is not working out, but there we see good amount of work has been done. This is really helping manufacturing industry, boosting the railway industry, defense, toys, and electronics. So India is now the second mobile manufacturer in the world, as I talk to you, with more than 300 plants versus maybe one or two in 2014. So that's the kind of growth that India has demonstrated in the last 10 years. Well, you look at foreign trade policy, which is for 2023 to 2028, which is going to boost the export, ease of doing business, and e-commerce, while SEZ attracts investments and jobs. So you would have seen, if you are in city like Bombay, Pune, Bangalore, you have SEZ locations. Like in Pune, I remember there's an area by the name Kharadi where you have SEZ locations, and it is attracting a lot of foreign investors, foreign companies to come in and start their project. The other thing is PM Gati Shakti and National Logistic Policy, which is improving the logistic and connectivity, while GST and corporate tax cuts. Because you remember, 4 years, 5 years back, we had corporate tax which was slashed down to large extent, and now with the GST reforms, this is becoming even more simpler and in terms of compliance and low cost, which is eventually helping creating the business friendly environment in India. Well, this is a GST reform. I don't want to talk about that. The government of India was already working on this for the last 1.5, 2 years, to be very precise. And what we were also witnessing as far as GST collection is concerned, that somewhere this was getting stagnant, in the sense that it was numbers were not going beyond 1.70 lakh crores. So there was a need of this reform, and with this reform, I'm sure the consumption story will start firing in India. So it's basically a big relief for common men and a big boost for businessmen. Then let's look at capital expenditure. We always say that government kharcha nahi kar rahi hai. Now these are few numbers that I want to highlight here. Let's compare this with the last year number. So when you look at April, government of India spent about 1,59,790 odd crores. Vis-a-vis what is spent in the last year was only 99,000 crores. May again, 61,000 versus 44,000 last year. And July is about 71,000 crores. So both put together, when you look at the total number of April, May, June, July, government has ended up spending about 3,46,000 odd crores, vis-a-vis the last year, which was 2,61,000 crores. You see how government of India is achieving their targets in terms of taking the capex and want to drive the growth. We always say that government is not able to spend money, and therefore growth is not. In fact, last 2 to 3 months, government has given a lot of projects to private players also in order to improve the private capex. L&T has got about almost a big project of about almost $5 billion in the last 3 months, and therefore their stocks are going up. No recommendation, just sharing it with you. So Let's look at the other reason why India is growing. India has recorded 59.8 PMI. This is highest in the world. And this has been happening silently even in the month of August. It was at the highest 59.8%. I have been repeatedly saying that the PMI number, even you would have heard Samirji last time, last month, and last to last month. I have categorically mentioned that this number is going up and remain sustained at beyond 58, 59 levels. And any PMI which is above 50, which means that your economy is expanding, and anything which is below 50 is which means that your economy is kind of not growing, as in it's degrowing. So look at the numbers. Even it is higher than USA. So USA is at 53. Saudi Arabia has come and done a lot of work last month particularly, and has come up on the curve, which is about 56.4. But otherwise, India and US and China, these are the countries where we see good amount of growth. In fact, you see China's number in August has come down a bit, from about 51 and a half, 52 to 50.5. So this is what is happening in India, and this is where I call it a new Bharat. A lot of people don't know that India has emerged as the third largest country in terms of solar power generation. पहले क्या होता था, when you have any new initiatives and you come up from the global economy, you see India used to be a 10th, 11th, 12th position, somewhere 44th, 45th. But now this is called new Bharat. So here India, if they feel that renewable energy is here to stay, they are putting whatnot, all kind of efforts to ensure that they continues to be amongst the maybe second or third largest. So it's not about India by 2030 is likely to become third largest just because GDP is expanding, but the kind of initiative which is undertaken by this government of India, and also by people, the industrialists, is actually helping us to reach there and sustain there. Now, what is happening across the bank group? So there is good amount of transmission across the bank groups. There is a clear-cut data where you have comparison between public sector, private sector, and foreign banks. And this is the example of WLR. So what is happening is that because of the rate cuts, your EMIs are going down. Your home, and suppose you have EMI of some 50,000 rupees and it comes down to 45,000 rupees. Where are you going to put this 5,000 rupees? Obviously, you want to spend money. And as you spend, the consumption story will start driving in India. And that is what is happening. One, your EMI is getting reduced from 50,000 to 45,000. So you have a saving of 5,000, but you're not saving this money because we just saw in the previous slide that the deposit rates are also declining. So therefore, people are saving less and spending more, and that is boosting the consumption. So here we are driving the government of India wants to drive this consumption story even more further. And then you have economic growth where you have higher consumption and investment, which increase overall demand, which basically eventually becomes the cylinder which supports the production and the job creation, and which eventually help GDP to grow. So you understood how each one of them is how connected with each other and what happens to the economy. Now, other couple of other data points. I already talked about manufacturing PMI level, which is surged at all-time high, 16 months high. We saw huge amount of growth in two-wheeler and three-wheeler segment, particularly coming from rural economies. And as a result of that, and when you have good amount of growth in automobile, you see the entire chain starts working. And when you look at the data, for example, I have data from almost last year July to this year July. And when you look at last 1 year, except for your electricity, where we saw because of the rain, we couldn't produce the electricity what was required, particularly in May and June. These are only 2 months. Otherwise, you see everywhere we are witnessing good growth. You want to talk about PMI manufacturing. I Told you it is 58.5, 58.4. You want to talk about export data, it is up by 60%. You want to talk about two-wheeler production, it is up. You want to talk about three-wheeler production, it is up by 8.6%. You see across the parameters, this scorecard is clearly indicating the kind of work that India is undertaking and doing it. You want to talk about India has emerged. I don't know how many of you know that we are now emerged as the third largest manufacturing hub in the world. A lot of people are saying that India mein manufacturing nahi hota hai. You know, while you can't compare that with China, because China has transformed completely from and has been has done a lot of work from 1991, whereas we just started doing all that from 2014 onwards. So a lot of work needs to be done, but now India has emerged as the third largest manufacturing hub in the world. And this is where I call it, our Honorable Prime Minister also talks about this, is called New Atmanirbhar Bharat. Now, what do you mean by that? It means that you see, despite so much of outflow, you see, in January, in February, FPIs, they took out almost assets worth 1 lakh crores, almost. And in the month of March, again, they sold. And then maybe April, May, June, they did not have too much of selling. But again, from July onwards, July, August, they've been selling equities. So they are at decadal low. I mean, I don't know how many of you know that they are at about 15%. They have only 15% exposure to Indian equities, these FPIs. And despite all that, the markets are remain at about 81,000 levels. What does it mean? As you can see the red line, that despite FPIs are selling in India, you see here all the green lines. Um, Market continues to be at about 81,000 because your domestic story is very strong. You have domestic retail investors who understood this point that markets may go up, may go down, but if you stay patient, if you continue to invest, you create good amount of wealth for yourself in the long run. And this is nothing but the data clearly indicates that it's a testimonial of these retail investors, what they are doing in India. Couple of other data points very quickly. So what I've realized is that the mutual funds are reaching out to every small household now. Glad to share that we are at about 7% now, almost 6.5, 7% of the overall total financial savings that we have. The mutual fund holds about almost 6.5, 7%, which used to be, you see, in 2011, 12, it used to be less than 1%. So in the last decade, we saw huge value migration happening here, and number is now inching towards 6.5% of the overall household savings. The interesting fact is that when you look at the overall MF vis-a-vis the total deposits of India, this is now inching towards almost 25%. So it used to be less than 10%, as you can see here in 2013-14 times. The total mutual fund. So I'm talking about, let's say if the mutual fund is 70 lakh crores today, the 70 lakh crores or 75 lakh crores to be very precise, is actually a 25%. So which means that you have total deposit base of about 250 to 300 lakh crores. I'm removing the institutional part. So, so it used to be less than 10%, 11 years back, 10 years back, and today, almost a decade back, and today it is 25%. You see how the value migration is happening. So we talked about all the strength, the real numbers, the way it is growing. We talked about Atmanirbhar Bharat. We talked about transmission, New Bharat, second generation PMI, etc. But what are the concerns? What are the headwinds now? Let's look at that. The first is what is happening globally, the geopolitical risk. You see the kind of sanctions and the tariff rate has been put up by USA. So the entire globe is trying their best to see to it that India should not grow. But this is new Bharat. India does not care about it, and India is reworking and talking to 20 new countries, different countries. They have identified the Ministry of Finance and have been continuously engaging as to see that they divert the kind of material they were giving it to USA to these other countries because of this concern. The other thing is private manufacturing. So I told you that due to low capex by private sector, and private sector takes capex, by the way, when they only witness huge demand. Until and unless they see demand coming up, they don't take that kind of capex. And clearly what we are witnessing is that couple of sectors got affected, which is petroleum, automobiles, electrical, food products, etc. So there, the numbers are going down, and the earning seasons were also slowed down last quarter, particularly, and from the last 12 months to be very precise. So IT companies saw some amount of decline in terms of their growth because of the global headwinds which are coming up. And the non-IT companies also witnessed moderate growth. I won't say a good growth. And banking and financial sector, particularly the revenue and the net profit growth, both moderated during Q1 2025-26. So these are the numbers, as you can see: revenue, expenditure, operating expenses, and net profit. And when you look at and compare from 2014 to 2015, these are last quarter's number. Then you can see that some of the things are moderating, like banking and financial and non IT sector. But the real affected sectors were about like automobiles and petroleum, etc. So that should start now with the new GST reform, and the taxes rates are going down. Uh, they should start improving. And once it starts improving, you will see the result. Uh, the other thing is high frequency indicator, rural and urban demand. So what is happening is that your rural demand is outpacing the urban demand. And as you can see the data here clearly, you see in some places urban demand is good. For example, you see what is happening is that domestic air passenger traffic last year in July, this was positive 6.6%. This year July it was negative by 2%. And the other thing is that retail passenger vehicle sale, it was as high as 14% vis-a-vis the last month. It was 0.8%. You see how it is slowing down. And on the other side, rural demand, when you look at rural tractor sales, it was negative by 12% last year in July. And this year, July, it is positive by 11%. Last year, the Manrega work demand, which was negative by 20%, now it has come down to negative by only 12%. Uh, the retail two-wheeler sales, which was positive by 17%, this time it has shown the negative growth of 6.5%. But as we move forward, we are overconfident that this two-wheeler growth will grow up in India. So that's the concern. When you look at the performance wise across the global asset classes, I have taken the data from 2015, 16, 17, 18. So almost 10 years of data point. And there, when you look at, something like, for example, Nifty 500, then Nifty 500 has a roller coaster ride. So in 2015, it delivered 2%, only 0.02%, then 5%, then 37%, then minus 2%. So likewise, this has delivered a roller coaster ride, Nifty, but so is the other asset classes. So therefore, we always suggest that when you are investing your money as an investor, you have to have good diversification across the asset classes. These are interesting data. Last 1 month was negative because of FPI is selling in India, but uh, I don't know if you would have attended my market outlook session last month and last month. I have spoken very loudly that consumption story looks to be extremely good, and as a result of that, Nifty Auto delivered 5% positive returns. Nifty Consumer Durable delivered positive return of 0.8%. FMCG delivered 0.75, 0.75% growth, vis-a-vis the other major index like Reality, which was down by 5%, Pharma was down by 5%, Metal was down by 1.2%. This is the market cap to GDP number. Well, it is averaging it out to large extent from 129%. It has come down to 122%. We talked about it, the PE ratio markets, the large caps are at about last 10 years of average 1 year forward. When you look at, is at about 20, and last 10 years of average PE is about 18.9. So market is not at all expensive as far as large cap is concerned. When as far as mid cap is concerned, so this is at premium. So historical average is about 25. We are at 27 1 year forward. And small cap, which used to be at 17, is now at about 25. Uh, we would say that with the new US Fed, the way it is getting planned, that we're expecting rate cut in 2026, which will boost market sentiments and global growth. At the moment, these FPIs are sitting on sidelines. One, they're expecting India US deal to happen, and the second thing is they're expecting Fed to reduce the rate. If that happens, then you want to see FPIs. Some of them are likely to come back to India and start deploying their money back, and we'll see what happens. So September 17, 2025, the highest probability is at rate of 400 to 425 beeps with about 91% probability. I'm sure I don't have to show you. I've just taken a photo of some of these tweets where Donald Trump ji talked about, I'm pleased to announce that India and the United States of America are continuing negotiation to address the trade barriers between our two nations. I look forward to speaking with my very good friend Prime Minister Modi ji in the upcoming weeks. In fact, on 75th birthday of Narendra Modi ji, Mr. Donald Trump called him and congratulated him, and Mr. Narendra Modi acknowledged the same in today's Twitter. I saw that and thanked him, and given the assurance that India and USA will continue to have strategic partnership. So my sense is that it should get through. Maybe I don't know when is the timeline. And the uncertainty is easing from its peak. Uh, it was peaked out in the month of February, and it's now looks to be settling down. The other interesting fact is that your gold as an asset class is also shaping up well. So when you look at gold and when you look at Nifty and then divide the same with the gold prices, then you get about 2.8, 2.9, the current ratio, which is near the highest end of the historical average. Historical average used to be, I remember, 2.2, 2.1, which is at 2.8, 2.9 now. So peak in the ratio occurred around earlier in 2016, which was almost 3.1 that point of time, and low was at about 8.1, 1.8, 1.9. So while it is not the all-time peak, significantly above the long-term average, this suggests that gold is relatively expensive compared to Nifty, and Nifty looks to be cheaper from in terms of when you compare these two asset classes in terms of price. So we are not saying that don't buy gold or buy only Nifty. We are saying that you have to have diversification. you Whenever you have these kind of fearful situation, you see gold prices starts going up, and whenever you see these situations like this, you should be buying good amount of equities. And as the Warren Buffett says, that opportunity comes infrequently. When it rains gold, put out the bucket and not the thimble. कि आप जो है बाल्टी निकालिए मग्गे से, उस अपॉर्चुनिटी को मत एनकैश करिए. With that, I would like to conclude here my session, and on behalf of entire All Port team and the research team, I would like to personally thank each and every investor that who have trusted us, who has trusted our process. And maybe if you wish to know more about it, I would be happy to speak to all of you. With that, I'll conclude the session here, and thank you, Samirji.
Thank you.
Over to
Thank
you.
you. So, Vikasji, we have few questions. So, one by one, I like to ask on the behalf of my customer. So, one customer is asking that which economic reforms or policies are working for India growth story.
Yeah, so we've just discussed a couple of things that I have shown you in terms of data points. How can I share the data? Same slide again.
Yeah, yeah, please.
So you see, I already talked about what is working. So PLI schemes, as I said, has been the biggest contributor in terms of growth. The Digital India initiative that I talked about, how people increase the number of users have increased from 25 crores to almost 100 crores. The Make in India initiative I talked about, where we have become the second largest mobile manufacturer, maker, not completely manufacturer, because there are a lot of things that we import also, but a mobile maker with about 300 plants in India. The foreign policy which is shaped up between and shaping up from 2023 to 28, that is working very well. And PM Gati Shakti and National Logistic Policy, that is also going to improve the logistic. Now these are the things which are working well. As far as reform is concerned, Samirji, I talked about two major reforms. So one, we saw slash down. The government of India is slashing down the corporate tax in the year of 2017, 18, and implementation of the GST for the first time. And now, with the GST reform, this has become even more significant. We saw government of India. I mean, did you ever imagine that you don't have to pay any tax if your income is below 12 lakhs rupees? This has never happened in India, but it is happening here. So there are three cylinders on which India is trying to ride upon. Number one is your government capex, and I have just shown you the number, the government capex, how consistent they are, and credit goes to them that they are maintaining this kind of consistency in terms of following that they have to spend this much of money, the target. So they are in line with their projected targets, and they've spent about 3,46,000 crores. So one is the government capex. The second is the private consumption, which is the way government of India has planned this is that they have not only reduced the income taxes, they have not only reduced the GST taxes, and they have also supported the overall consumption driven culture. And as a result of that, second half of the year, what we are witnessing is that they should start shaping up very well. So that's the second cylinder, which is consumption driven. So it used to be government capex led growth. Now it is capex plus consumption led growth. And on top of that, the government of India is also trying to maintain the overall financial, fiscal, and current account deficit, and also wants to focus on exports. So these three things put together, I think government is taking a lot of steps towards that. Over to you.
Okay. So, with these data points, what you had shown in today webinar, Vikasji, so are you trying to say that from next year onwards, we can see some large movement in market?
Yeah, so first half of the year was not up to mark. You've seen that. And in fact, from the last 12, 13 months, Indian markets have corrected by almost 15%. So this year, second half of the year, I believe that things should settle down, and you will start witnessing that the markets will start doing better.
So, from last 1 year, because the large cap is not doing well, not performing well in compared to mid and small. So, what is your views on that?
Yeah, I have just shown you the valuations also. Large cap is not uh, performing for the last 3 4 years, and not 1 year alone, in fact. And no denying on the fact that what was expected from the large cap companies have not delivered to that extent because of the global headwind which is there. And second, the earnings have also slowed down there. So with the consumption picking up now in the second half of the year and next year, I think the large cap companies should start doing well. From a valuation perspective, it looks cheaper now. It is very much closer to last 10 year of average, which is about 20. So I am confident that large cap should start doing well.
Okay, thank you, Vikasji, for your data and insight, what you had covered in today Market Outlook webinar. And thank you, investor, for attending out our Market Outlook webinar. We value your trust and look forward to helping you with the right investment strategy.
We
Thank
can
you.
take
Thank
some more questions if you're okay. Maybe you can invite
you.
Aditya
Questions
from
uh,
Anuradha.
so,
Any?
audience, if you want to ask some more questions, please raise your hand. I will allow you to speak.
Jayesh ji, Ketan ji, please feel free to ask. Pawan ji, you can, in fact, if they are raising hands, then you can allow them to speak. Balaji sir,
So,
thanks for joining
so
in.
no one is raising hand without me. So
Okay. Yeah, there is one. Anupam.
Anupam, yes. So I'm giving you. So Anupam ji, you can ask a question. You can talk now.
Yeah, thank you, Balaji sir, for uh, your feedback. Are you? Yeah, I'm grateful that you liked the session. So thank you. Chetan ji, you are NRI and you're asking that what kind of investment should you look out for? Well, if you are NRI, then I think you should think about participating in Indian capital markets growth. I think the kind of uh, plans that India has, that by 2047, India will be, transform completely from a developing economy to developed economy. And the framework which has been prepared uh, by our honorable Prime Minister, this government is focused on executions, and not they're not only focusing on strategy, they're focusing more on executions and ensuring that those numbers and those targets are met. So clearly I see that uh, you know let's not talk about becoming third largest economy, which many which ways we will become maybe 2 years down the line. But if you are NRI, then you should think about deploying as much money as possible in India and take the advantage of the next decade growth, where we're all set to become $10 trillion of economy in next 10 to 12 years, 13 years time. And you will see that the kind of work which is happening here, I've just shown you some data points. Because what happens that we keep hearing negative news on, when you turn on a couple of TV channels, especially the news one, and you see that when FPIs are selling, you become little negative about India. But the kind of work which is happening, recently you would have heard the Commerce Minister talking about India will start producing the chips, and if once they start making this chip, so probably you will see India will become a very significant player as far as global supply chain is concerned. You talk about rare earth, you will see that India is working towards that and trying to identify a couple of pockets where you see some rare earth coming up the in terms of producing these unique items. Then you're going to see that petroleum wise, India is going to explore more and see if there is any way that we can reduce the crude prices, reduce the import levels. And India is also speaking, and recently we saw US, India, UK signing the trade deal with each other. And very shortly, you want to see At least 20 countries have been identified where they want to complete the deal by next 12 months or so. So India will become, as already becoming in couple of areas, third largest, and will become globally a very, very significant player. I think we are all proud Indians, and you as NRI will feel better when you are treated there. I'm sure your respect level would have gone up. What it used to be 10 years back when you say you are Indian, and what it is now when you say that you are Indian nationals. You may continue to consider equity as an asset class, and also deploy and diversify some bit of it in gold also. Gold as an asset class looks to be extremely good. With these two, probably you can reach out to a team of experts, and they will call you, and probably you can explore a couple of ideas in terms of products, both on the AIF side as well as PMS side.
Can I ask you one more question, if you don't mind, sir?
Please do.
With the AIF, the exposure seems very risky, as compared to there is no backup. Like you put the money in gold, you can sell the gold next day. If you have a bond, you can sell it very quickly, because it's more kind of a secure. With AIF, it looks like your exposure is very, very high. There's a risk involved. Obviously, there's a reward as well because you're trying to achieve the alpha. My concern is, if I want to play safe, even though it's in AIF market, can I do that, or you have to take a risk?
Yeah, I'll explain that. So there are broadly three categories as far as AIF is concerned in India. So you have category one, which essentially invests in startups. You have category two, which invest in large startups, which are maybe in the verge of coming out with an IPO. But all these investments are, as you rightly said, are maybe do not have that kind of liquidity that you are looking out for. So it's not meant for you. But there are some unique opportunities as far as category 3 is concerned. In category 3, you have open-ended AIFs which exist in India, where you get complete liquidity. You sell the AIF, and within T plus 5 days, money hits your account. Number one, so complete liquidity. Now, as far as risk is concerned, you have a risk which is there in the market. So if you are investing from 3 to 5 year perspective, then you have a similar risk. Maybe you are investing in mutual funds or any other instruments that way in terms of the beta level. And on top of that, there are some private credit AIFs also which exist, where you don't have to take too much of risk. At the same time, it generates a good amount of returns in your hand, post tax, post fees. You can reach out to a team of experts, and they will help you understand all that in details.
Cool. Thank you very much, sir. Thanks for the info. So, is that the minimum, and there's a minimum terms as well, or there's no minimum amount or minimum terms?
Yeah, as far as SEBI regulation is concerned, you have minimum threshold of 1 crore in any IFs that you invest in India.
Yep. Yep. That's fine. Thank you, sir. Thanks for your time.
So, Anupam
Yes,
ji,
you
you
can.
can ask.
हेलो ऑडिबल है सर
हाँ, Anupam
Yes.
ji,
हेलो
audible. Yes, yes.
ऑडिबल है सर विकास जी मैं ये पूछ रहा था ये जीएसटी जैसे अभी कम किया है तो गवर्नमेंट की स्वाभाविक है कि गेन कम होगा तो वो कैसे करेगी सर आगे कैपेक्स
ये देखिए, वो एक सोर्स है। जीएसटी एक सोर्स है, वो सारे सोर्सेस नहीं है। और भी सोर्सेस है। डायरेक्ट उनके जो इक्विटी में ट्रांजेक्शन होता है, उससे कैपिटल गेन आता है, दैट इज अनदर सोर्स। उसमें एसटीटी गवर्नमेंट कलेक्ट करती है, दैट इज अनदर सोर्स। जो इनकम टैक्स होता है इंडिविजुअल का, वो एक सोर्स है। एक कंपनी का इनकम टैक्स होता है, वो एक सोर्स है। इसके अलावा एक्सरसाइज ड्यूटी है। तो जीएसटी इज वन ऑफ देम। सो और दूसरा क्या है कि जीएसटी में जो रिफॉर्म लाया है, जीएसटी में क्या होता कि एक पॉइंट पे स्टैग्नेंट हो गया था नंबर, इट वाज नॉट गोइंग अप सर। So Government of India, what they did is they wanted to kind of rationalize the overall rate, so that आप देखेंगे कि 5 या 6 महीने बाद में अगेन द नंबर विल स्टार्ट गोइंग अप, बिकॉज कंजम्पशन बढ़ेगा। जब कंजम्पशन बढ़ेगा तो जो डिस्क्रिशनरी स्पेंड है वो 10 टाइम्स हो जाएगा। जैसे इकोनॉमी में अगर आपका अगर इनकम में ग्रोथ 1x आता है, तो ऐसा देखने को मिला है। अगर आप पिछले 10, 20, 30, 40, 50 साल का डेटा निकाल के देखते हैं यूएस का, और जो डिस्क्रिशनरी स्पेंड है ना वो 10 टाइम्स उसमें ग्रोथ देखने को मिलती है। तो वहां पे आपको देखने को मिलेगा कि जो नंबर आ रहा था अभी लास्ट कितना पीक आउट किया था 1.70 लाख करोड़, ये आप नंबर जो है ना 6 महीने बाद वापस आप इससे बढ़ता नंबर आपको देखने को मिल सकता है, मेरा जो सेंस है।
और और विकास जी, मैं ये हेलो।
हाँ बोलिए बोलिए अनुपम जी। Yes.
हाँ विकास जी, मैं ये और पूछ रहा था, अभी कहीं वेबिनार में एक देख रहा था, उसमें बता रहे थे कि मिडिल क्लास जो है वो बहुत डेब्ट में फंसा हुआ है। तो अभी ये जो जीएसटी का रिफॉर्म किया है, इनकम टैक्स जो कम किया है, तो उससे निकलने में अभी तो 1-1.5 साल लग जाएगा, ऐसा नहीं है?
बिल्कुल बिल्कुल सही सुना, 1-1.5 साल तो लगेगा सर,
तो मतलब
लग
एक
जाएगा।
डेढ़ साल हम अभी 1-1.5 साल मतलब अभी हम तेजी समझे रिटर्न।
हाँ, एक
बहुत
डेढ़
अच्छा
साल
बहुत अच्छी की तो उम्मीद कम ही करें।
यू आर राइट। यस, 1-1.5 साल लगेगा सर। इतना बड़ा बेस है ना, ये ओवरनाइट नहीं चेंज होगा। आपने सही कहा अनुपम जी, इसमें 1-1.5 साल
टाइम।
लगेगा।
ओके, थैंक यू सर।